And Nick, perfect timing here actually, because we have Twitter just bouncing around all over the place here right now. I was just laying out a scenario that I think, when you get these spikes of $2 on sudden news, sometimes they're short-lived because there's people underwater that are willing to take those quick profits. Now, if we look, Twitter just officially announced just a minute ago before you came on about the cutting back the employee workforce here by 336 employees, and also they announced that their Q3 revenue is going to be at the high end of estimates. So they're basically guiding higher here. And we saw Twitter pop about $1.50 on this news. Thoughts on Twitter here, Nick?
Last week, I don't know if you remember, I think it was last week, I have to replay the show. I did say I was holding a 30-31 call spread based on something I saw in the open interest, and it hit just over 31. I bailed out a little too early, but as far as it being at 28, I expected a little bounce closer to 30, just based on what I see in the open interest. So I wouldn't be surprised if it gets closer to 30, and if nothing changes over the next couple of days with regards to the open interest, it should be there. Headlines aside. Now, this headline is kind of stale. It's just a confirmation of something we know, except for the guidance higher, which just adds to the pot of, okay, it could be bought out. Okay, it has good, maybe they're turning around with regards to numbers. So it's hard to short something like this that's headline looming. And with regards to pricing, as far as what it's worth, who knows? I think it's a valuable asset itself, not as far as how the companies run or anything, just the platform itself. And we've said this here on the show for years as to, okay, somebody will get it at one point or another.
So what do you think, though, going forward here? So somebody's going to get it eventually, maybe one way or another, but is there not, some concern here from you that they're cutting the workforce back? Like, that's what I was looking at here. When they're cutting 336 employees, they're not like this, legacy company that's looking to cut costs, and that's how, because sales. It's always the way I look at it, and this is why I think they whacked the stock eventually yesterday. This is a startup really. So when you're cutting workforce back, and maybe they've hired too many people off the hop, but it's just telling me that. Go ahead.
Maybe it's the mix. Cutting workforce is not always a cost thing. It's a direction thing. So it's stupidly saying it is, if you had thought you were going to develop something new and you hired 30 engineers and suddenly you said, okay, this new venture, our focus reshifted to our core and we don't need these people. So it's not always a cost. It's always an effort. Okay, where's the area that we need help in? So if they had ideas of doing this or whatever this is, and then the new management or the new direction, the new focus is going to be, okay, let's focus on our core, which is the platform, and maybe get some advertising going or something. So I don't know what they're cutting, so I don't always say, okay, it's a bad thing or it's a good thing. Yeah, it is a growth company. You don't want to see them cut. But nobody's buying it because of its, very few. I wouldn't buy it because of its performance. I would buy it because of the asset it is and its potential. Whether under this management, I still can't believe that they don't talk about converting the clicks. I mean, Google makes its money by pay per click. So I see all these big publications, like Wall Street Journal, for example, publishes an article. You click on the article, you go to a page, and they get to sell you on their products and services.
Yeah.
Why is it free to Wall Street Journal to do this? Google charges. Why is it free on Twitter?
It's a great point. Yeah, because they're just, an advertising venue, and a lot of people use it for free, obviously. Oh, yeah, I'll promote my thing on Twitter. I'll promote my product on Twitter, and I'll keep promoting it there. Maybe they should be, charging some of these people for clicking back through, and when you have 100 people come and they click your link, maybe they should be charged 10 cents or whatever it is per click or $1 per click, so depending on what
and they can do it cost per click, cost per acquisition, cost per impression, whatever. And there's many ways where you can actually make it so it makes sense to the advertiser, and it's something that they can actually measure. It's not like eyeballs. They can tell you, hey, we sent you this guy and this person and this person, this cookie. So it is measurable. So I don't know why they don't do that. But as a trade for the week, I wouldn't be surprised if it should be closer to 30 than where it was yesterday. And it was definitely too low when it was a few days ago.
So the open interest is telling you that this thing probably could have a magnet towards 30
It should
for
be at
this
30.
week.
Yes. Yes.
What's the open interest? Let's go to the overall market here for a second, Nick, because we've had obviously a pretty impressive run over the course of the last couple of weeks. Now we're starting to pull back here the last couple of days. What's the open interest look like this week from the overall market's perspective?
I was focused on the small caps. They had the overall is a bearish setup for all the indices that I track: SPX, the SPY, RUT, IWM, and the Qs. They were all set up where the bulls had the setup to continue the momentum. Obviously, we had 7 days of up days, and they're allowed to breathe a little bit. And this morning, it looks like they are. But I was looking at the IWM. Currently, we're at the 115. Anything below that is supportive. So the bulls have a platform to go if they want it. And they have pull from 120 on the IWM. So they had room to go, and they had the pull to go. They're just not going this morning. It doesn't mean they're not going to go. But the setup is bullish, but I'm still more afraid of the bearish overall quarter versus being, in other words, I'm more comfortable shorting with time and distance, leaving room for error, than going long things here. So because we're not going to crash up, but we could whoosh down since we just saw a flash crash not too long ago.
Nick, what about something like Netflix? We're going to get their earnings report tomorrow. Scott Redler was on our show yesterday saying Netflix is pretty well positioned going into this earnings report. What are your thoughts on that?
Based on the open interest, it has more chance of being at 105 than, say, 120. But I have to put a caveat that during earnings, the moves can be violent, especially in a stock like this. We've seen it not too long ago. And so I would not put a big size trade based on the open interest, because the open interest gives me guidance for normal circumstances, headlines aside. When a headline hits, it overrides everything because people are wrong there are a lot of people that could be wrong. So, but had this been a normal week, I'd buy puts in Netflix here. But this is not what I would do into earnings unless it's a small amount of money that I just want to gamble away, like a lottery ticket, where I say, okay, I'm going to give it $100 and it could pay me $2,000, and I'll do this. But this is lottery. It's not a fundamentally driven trade. The better trades on earnings are definitely set after the earnings with clarity.
I got to move it over to Priceline here, Nick. You know, I always like asking you about Priceline because this is your baby, and this stock has had an incredible 2-week run. 2 weeks ago, we got down and breached 1,200, got down to 1185, and we turned on a dime. And I'm just looking at it from the last 7 or 8 days, and we've been basically up 8 days in a row here on Priceline. Stock closed yesterday really almost like a capitulation move. It felt like getting up over 1350, up to 1352 and a half. It is pulling down slightly this morning. It's down $7 in the pre-market with the overall market here. But what are your thoughts on Priceline, and are you fading this pop?
I have not faded it yet because I'm short enough other things. So I don't want to overload my book short, but definitely it does look, yesterday's candle looks like a small breakout. I had 2 scenarios, which that's how violent this stock is. Within the last 2 weeks, I had a scenario down to 1,100 and one to almost 1,400. And they both threatened to get there. So the 1,400 threatened yesterday, and the 1,100 threatened about 10 days ago on, 928, I think it was when it threatened to go down there. It had it come down a little bit more. So yes, I would be comfortable selling some way out of the money, way out in time calls and Priceline around here. But again, I'm short enough things, so I'm not going to do it personally. But this is the time where, yes, I would do it.
Nick, moving over to Tesla here. This is the exact opposite story of Priceline, where Priceline has been strong the last 2 weeks. Tesla cannot catch a bid, and this stock has basically been down continuously over the last couple of weeks, despite a pretty strong tape overall. What is wrong with Tesla? It's trading down another 3 points here in the pre-market. Why can't this stock catch a bid?
Because people read my article.
They all follow this Nic Chahine guy, so you got to give it to us, and then and then let us everybody else know.
uh, on 10/1, I put out a note out there saying that Tesla needs several miracles in different areas of its business in order for it to live up to the expectations or start the living up to expectations. And then I got argued with somebody said, well, Amazon wasn't turning a profit for a long time. Look at them now. I said the difference between the Amazon and the Tesla situation is that Amazon could have turned a profit at any time within days just by turning off the stupid spending, whereas Tesla couldn't turn a profit even if it wants to in the next 10 years, probably. I'm not sure. But, they have all kinds of subsidies for them, for their clients who are buying their car, for their clients who buy their car and then want to install solar panels. They also get credits there. The people that the people that sell solar panels get credits from the government. So subsidies everywhere, and they still can't make a profit. Plus, the facilities they have to produce cars is somewhat limited. I understand it's pretty small. I've been to it decades ago, and it's physically small, and you can't just expand something that big. So yeah, Tesla needed all kinds of miracles in order to grow into its valuation, and I'm not too optimistic about it. I wasn't at 250. Now it's like $40 lower than what I said, and I do have a personal friend stuck in it, and I begged her to get out when it went up to 280 and 290 a couple of times, and I said, get out, and she wouldn't. So here we are.
One other thing I was going to add to your point on Tesla here. One other concerning thing to me is I see that they have to put these Tesla recharge stations everywhere, and they need to put them every couple hundred miles because and the charge only lasts 300 miles or whatever it lasts. So they need to have these recharge stations off of all the freeways. It's got to be Tesla putting those up because the gas stations themselves aren't going to pay for that buck. Like I'm in Canada here, and there was actually a couple of Tesla these recharge stations where they got 8 different pumps here about 20 miles from where I live. I've never seen a Tesla car charging up at any of these stations, but they've got to have those in there. So there's a lot of infrastructure and everything that they have to continue to do just for these cars as well.
Well, Dennis, I'll jump in here and say that especially in downtown Detroit, you'll see it's not the gas stations, it's parking structures and parking lots that don't just have Tesla battery chargers, they just have charging stations for electric cars in general. So yeah, definitely gas stations are not going to do that because they want you to buy, gas. But like parking lots and especially like parking structures that want to encourage people to use their structure and pay for parking there will offer these charging stations.
Yeah, there are shopping areas here like Costco and Kohl's. They have free charging stations out there. And I read yesterday, or I heard somewhere, that saying they have people unplugging each other. They can plug their own cars in. But speaking of Tesla, yesterday's scandal was pretty ugly in the way it ended. And in fact, if it does lose a few more dollars, like it looks like it's losing here, technically speaking, the price action is bad because it has a long effort up towards the 280 area and more like, and then failed back to an area of resting around 230, and then tried it again. It lasted a lot shorter and a little bit less, a little bit smaller, and it went back to 230 and it lost it. So now it's back to the 215, and that's like its third visit, including the flash crash that we recently had. So I would not be surprised to see it go down and repeat, to revisit the low of the flash crash was under 200. So technically speaking, I'm not too optimistic for Tesla, and fundamentally speaking, I hated it at 290 for sure. I don't like it. I didn't like it at 250, and I still don't like it here. So it just needs too many miracles, and nobody's that good, and nobody is that lucky.
Nic, let's just talk a little bit, and we'll take you out of your wheelhouse for a second because I don't think you talk about the financials a lot, but we are going into earnings season for the financials. We're going to see Bank of America and Wells Fargo tomorrow. We're going to see Citigroup on Thursday, and we're going to also see Goldman Sachs on Thursday here as well. And first of all, we never hear you talk that much about the financials. What do you think about Goldman Sachs? And let's get your thoughts here on this one as it's kind of winding up here, just hanging out ahead of its Thursday report.
Yeah, I heard you talk about first of all, the schedule of it. I think what happened is because of the holidays.
Oh, the JP Morgan,
Right, Bank of America stole J.P. Morgan's spot, and it was apparently, according to CNBC, it was a one-time thing.
Okay, so they're
So
going to go back to the pre-market. Thank you for clarifying that, Nick, because I was trying to
yeah,
figure out why is J.P. Morgan reporting after the bell?
yeah. Don't read into it. It was just a scheduling thing, apparently, according to CNBC, as reliable as it is. In this case, the person that said it seemed like she knew what she was talking about. All right. So what do I think about the financials in general? The XLF, as far as the open interest. There is exuberance. People expect it to 20. It's about what 23 and change now. They expect it to be closer to 25 this week.
Whoa,
Uh,
expecting a
but
pop.
but in my opinion, it's going to be limited at 24-ish. So it will really need some pretty fantastic results in order to drive through 24. But the expectation is closer to 25. That's the XLF in general.
Nick,
The bank
I
of
just want to
yeah.
stop you for a second there because you haven't explained this for a while on the show, and we do have some new listeners there. Can you just explain why the open interest affects the stock prices so much?
It not so much affects the stock price. It just tells me where the market is expected to be. So it's kind of like almost a self-fulfilling prophecy in some points. But it's how you interpret it and how it fits within your fundamentals that makes the secret sauce. And that answer is a lot longer than this. But for
Okay.
example, so it's basically if you want to go with the flow, people expect to move up in the XLF.
So when you see a lot of open interest at a strike price, like let's say 24, you see a lot of open interest, what does that tell you?
That a lot of people expect it to be up there. So if you know something better than them, you bet against them. Or if you want to go with the flow and you assume that they know better than you, then you follow them. It all depends on where it fits within your fundamentals. The open interest is the information is out there for everybody to see. It's how you interpret it, that is time consuming and also needs some know-how. And I interpret it differently than other ones. And my interpretation is very complicated and involves spreadsheets that are the size of, they're huge.
That's your secret sauce.
That's my secret sauce. It's
Okay.
where I download it and I make it visual for me and I'm looking at it and it just tells me a story. And that was the XLF in general. Bank of America, it should be closer to 16 than anything. What
Which
is
is
it now?
higher
15?
again. So
Yeah,
it's
15 and a
consistent.
half. Right. So the expectations are up, a move up, but it will need a reason to move up. In other words, it's going to be swimming upstream for it. And as far as J.P. Morgan, same deal. It has room to go. The expectations, they have some pretty high expectations. I mean, in the open interest, there are a lot of people expecting 70. And
There's people there's people taking flyers on 70 calls on this earnings report. Sold to
yeah.
you. Sold to you.
Well, it could
Really?
be that.
What are those calls going for? What are the 70s going for? How much premium is in there?
I don't know. I don't have the cost in front of me. But listen, it could be from the times. They could be older
True.
positions from before the crash.
Right.
We were pretty darn close. So it's not that they're stupid.
Okay.
They just didn't bail out. They hung on to their asset until they depleted. So the expectations. That's why I said it's not always what you read because you don't know when it was set and all of that.
Right. Great point.
So the expectations are higher. But then again, it needs a lot. It's swimming upstream. So if you want to be contrarian, puts might pay. But again, this is a lottery ticket because you don't know how we as traders are going to react to the numbers or what we hear and the guidance. And that's what scares me. Nobody's going to come out and say, oh, things are looking great downhill. When they have the opportunity to say, we're cautious, everybody's going to say it. Because they want a UPOD, right? They want to underpromise and overdeliver as much as they can without hurting their stock price. So they deliver decent numbers, and then they say, but you know what? Look at the world. It's all a buzz. The Fed is worried. So we're worried too, of course. So we want to guide cautiously going forward without, breaking down their stock. And the Goldman Sachs 180 is where it should be, but there's a lot of expectations to 190 and higher. But again, swimming upstream. However, I see good support for it. So if they want to sell it hard, they're going to need a good reason to do it. And I'm not sure they're going to get a good reason to do it. So I'd be bullish on Goldman. If I was to put a flyer out there, I'd buy calls. And here's the thing. Goldman Sachs reports last, right, or later. So if you want to play the earlier ones via Goldman Sachs, because if JP Morgan's going to jump big, Goldman Sachs is going to follow it in sympathy. So if you buy calls in Goldman Sachs and it doesn't move a lot, you have a day to get out of them to change your mind because it's still going to carry premium because they haven't reported yet. You know what I mean?
We've been on the line with Nic Chahine. He's our options expert. He joins us every Tuesday morning. Nic, thanks for coming on the show today. We're excited to have you back next week after we get some of these financial earning reports.
Looking forward to it. Thanks.
Thanks, Nick.